Hello all and welcome to this webinar on state and federal funding, DEED, the CARES Act, and payment protection. My name is John Keimig and I'm the director of the Family Business Center here at the University of St. Thomas. I'm joined by my colleague in the Schultz School of Entrepreneurship, Beth Bagley, who will be assisting with the technical side of the event and stepping in if anything is needed. These webinars are a joint effort of the University of St. Thomas Schultz School of Entrepreneurship, Family Business Center, and Small Business Development Center. This is the fourth webinar in our series that brings you up-to-date information to help you navigate business in this new uncertain time of the coronavirus. We've covered the EIDL disaster loan program, new HR laws during the coronavirus, and a business owner roundtable. Those webinars and other resources can be found at link.stthomas.edu/business support series. It's on the bottom of your screen right now. Again, that's link.stthomas.edu/business support series, all one word. Before we begin, we are recording this webinar and we'll post it on that website that is being created as a hub of resources for your business. We will send that link out in future emails as well. And now a quick orientation to the Zoom webinar. All attendees are muted, but we invite you to click on the Q&A button at the bottom of your screen to pose your question or add your comment. We will be splitting this event up into two sections, first with Bob Isaacson from Minnesota DEED. So if you have questions on the program that Bob is talking about, please ask those questions during his presentation. Once he wraps up, Rick Wall from Highland Bank will talk about the federal programs. So if you can hold off any federal program questions until until his presentation, that would be great. I will compile the questions and ask the presenters at the conclusion of each of their presentation. So today we're bringing you more information on emergency funding from the state and federal levels, and Bob Isaacson of DEED will start with state funding. Bob, can you please let us know what is going on with the state of Minnesota?
Thank you. I appreciate the opportunity to visit with everybody to talk a little bit about what DEED has done, what the state of Minnesota is doing in terms of helping businesses navigate through these difficult and challenging times. We have a couple programs that I want to talk a little bit about, but before I get into that, I wanted to talk a little bit about a great resource on our website, which is mn.gov/DEED, D-E-E-D. And when you get that homepage, there'll be a big COVID-19 slideshow, 3 slides, I think, and the third one is information resources. Click on that, and you'll get a variety of different resources that are available to individuals and businesses, since our department is employment and economic development. One thing I wanted to focus on particularly is a guide for businesses that kind of provides a nice listing of different federal resources and state resources that are available for folks to be able to perhaps take advantage of as you look to moving through this difficult time. Also wanted to talk a little bit about, or mention at least, local resources that are available. Many cities have established loan funds or have adjusted some of the terms of loans that are outstanding right now to help businesses navigate. So if you're interested in perhaps pursuing some type of assistance at the federal, state, or local level, talk to your local folks first. They're the ones who are right at your doorstep, and then kind of navigate through the different levels after that point. 2 programs that we have instituted here at the Department of Employment and Economic Development in response to legislation and executive orders established by Governor Walz a couple weeks ago. The first one is the Small Business Emergency Loan Program, SBEL. This program provides assistance, short-term loans, bridge loans to businesses in some specific industries that were noted in a couple executive orders preceding the executive order that established the loan program. Specifically, it's just for those who are interested in executive orders. Our executive order is 20-15 that establishes the loan program. And it refers to Executive Orders 20-04 and 20-08 as the 2 executive orders that speak to industries that our loan program can actually work to assist. In order to be eligible for a small business emergency loan program, a business needs to be mentioned in one of those 2 executive orders, 2004 and 2008, and have to have been directly and adversely affected by those closure orders that are mentioned in those 2 executive orders. Now, a Small Business Emergency Loan Program and the second program I'm going to mention in a moment are both chronicled quite well on our website, which again is min.gov/DEED. click through to the different loan programs under Business Resources. And that will provide the different industries that are available to receive some of the assistance to the Small Business Emergency Loan Program. From a high level, I won't get into all the types of industries because it's dozens and dozens, but from a high level, it's kind of a hospitality related in terms of food, bars, establishments, theaters, gymnasium, fitness centers, amusement parks, indoor amusement parks, athletic clubs, and then so on. So that kind of gives you a big picture, but I encourage you to take a look at Minnesota or min.gov/deed to get a real good sense of the specifics and to see whether your industry is actually eligible. To be eligible, you have to be in that industry, and then to further be able to be qualified, you need to be current, somewhat current on financial obligations. We don't use these dollars to repay existing debt other than continuing ongoing term debt. Be an existing business, have been operating in Minnesota long enough to demonstrate some viability. Doesn't mean you need to be here 5 years or even a year, but you need to be here at least long enough to indicate that you have some operational viability to move past or operate once the conditions have ceased and been terminated. We look for collateral personal guarantee for 20% of the loan, so a small little skin in the game, if you will, to make sure that the business is committed to repayment in the long run. So just 20% of the loan in terms of collateral personal guarantee. And we do look to determine that you are unable to get some type of assistance from other financial institutions. This is really considered a bridge loan. So if you go to the website and look at some of the lenders that we operate this program through, they can help you out determining how best to determine whether you can receive a standard loan. Oftentimes the lender that you'll work with will be able to provide that information and say, no, you can't get it. We're here to help you out. So in terms of navigating the system, go to our website, see if you're eligible, and then you find a certified lender that we are working with on our website, and they'll help you with the actual intake application, and then they'll get you request some financial information from you, a limited amount of information, to try to get this moving through very quickly. We actually got approved for this loan program 2 weeks ago today, or yesterday rather. It's Monday. It's hard to keep track of the days right now. And we actually started sending money out last week. Up to this point, through today, I think we've distributed about $1.4 million to 58 businesses. So it's moving along quite rapidly. We have $30 million that we're distributing through the program, so a lot more dollars are there. We've received, however, thousands of inquiries and a couple thousand different applications from businesses. So a lot of interest in the program itself, but we're hoping that we'll continue to receive interest and potentially some more dollars from the legislature as well. The loans themselves, the terms, they range from $2,500 to $35,000, and really we're based on the firm's economic injury. And for one proxy for that we're encouraging our lenders to look at is 3 months of operating expenses. What do you need to kind of operate for 3 months? Assuming that March and April you'll be closed, in May we're hoping that you'll be open, but it does take money to get going again. So 3 months, typically what the loan will be equivalent to, up to $35,000. The loans are interest-free. They're paid back monthly over 5 years. The first payment's deferred for 6 months, so no worry about payment until 6 months have passed. What's also nice is we're looking at some partial forgiveness may be available if you're still operating at a high level. Up to 50% of the loan can be forgiven in 2 years if you're still operating and have employment at the location which you indicated on your initial application. And of course, it's only available to Minnesota businesses. So again, go to our website, find a lender, a certified lender that's listed under the Small Business Emergency Loan Program, submit an application. They'll be in touch with you. They'll get information on your financials. That will be submitted to us, Indeed, and then we'll approve and get the money dispersed. So at this point, we're looking at, once the application comes in, 3 or 4 days for money to get back actually out to the lender and to the business. So pretty good turnaround, and we're excited about how this is moving forward. The second program I wanted to mention is the Minnesota Small Business Loan Guarantee Program. Now, in contrast to the Emergency Loan Program, the Loan Guarantee Program really is open for just about any business. Only exceptions might be ones that are related to passive business operations. We're really looking for operating businesses. Adult-oriented businesses are not eligible. And there's a couple other small little areas that are not able to receive a guarantee through this program. Like the Small Business Emergency Loan Program, we work with existing lenders. In this case, these are This is how the website that will list the different banks and other lenders who are eligible to provide loan guarantee under this program or be eligible to ask us for loan guarantee under the program. It's up to $250,000. We are going to guarantee up to $200,000 of that. We received $10 million for guarantees, so we expect to do $20 to $25 million in actual loans, of which the $10 million will be able to easily guarantee, given a default rate of 30 to 40% of the max. So we're in pretty good shape there to do $20 million in loans through the program. Like the emergency loan program, go to our website, find a bank that you want to work with, and then talk to them directly, and they'll originate the loan with you and then submit to us the paperwork to actually guarantee the transaction. What's interesting about the loan guarantee program is, like I said, it's just about any industry is eligible, and it's up to $250,000, which is significantly larger than the other emergency loan program. But there's no loan forgiveness, and the interest rate is really subject to the actual banking institution that's originating a loan with you. So we're not dictating or mandating the loan terms, unlike the emergency loan program. But I think in most cases the business working with the banks very successfully and getting some reasonable terms, especially because 80% of the loan will be guaranteed by the Minnesota Department of Employment and Economic Development. I think with with that overview, I'll leave it there. I'm sure there'll be lots of questions. One thing I did want to mention, one of the questions I get a lot on these programs is nonprofits. Both these programs are for-profit businesses. Nonprofits are not eligible. If a nonprofit has a subsidiary operating as a for-profit business to generate income, that is perfectly allowable, but the actual nonprofit operations are not eligible. Generally, we're looking, as I mentioned, for the emergency loan program to be a bridge loan. So if subsequent financing is received at the federal level or any kind of grants received from different foundations, we're looking to get some of those dollars to be used to repay the bridge loan that we provided, with a thought that we're never going to have enough money to help everybody else. So if you're repaying those dollars, we can then lend those dollars out to your neighbors. So we're trying to spread those dollars out. If you're fortunate enough to receive financing through another form, we want to be able to use the state money to help a neighboring business that you might have. One emergency loan and one loan guarantee per business. You can have 2 transactions, one in each program, but certainly only one loan per business. And I think what's really important to note is, although we can certainly look at the machinery and equipment expenses, both these programs can be used for working capital, which is really essential for businesses to meet some of the day-to-day expenses to meet, whether it be payroll or rent or whatever the case might be, to help them ensure that they're in business and be able to move ahead once the health crisis is past us. Rick, or John, I think that's it for me.
Yeah. Great. I got a question here that kind of dovetails off what you were just saying. Can someone get the deed loan even if they're applying for the federal payment protection loan?
They can. What we generally look at is if you're going to be successful receiving that PPP or any kind of SBA assistance, that some of the proceeds go back to paying off the deed bridge loan. It's really thought from the legislature's perspective to be a bridge loan, and those businesses who are able to get money elsewhere to pay off the state loan, then we can use it to help your neighbors.
Will layoffs affect the loan, and if so, how much?
In contrast to most of our businesses, most of our programs in economic development, where we do have some job requirements for the retention or job creation and wage levels, these 2 programs have no connection or relationship to job levels. The only relationship might be if you, in terms of the emergency loan program, if you would like some forgiveness after 2 years, you need to have substantially the same amount of operations, which roughly would be speaking towards employment or sales, revenue, and so on.
Someone says they submitted a deed loan several weeks ago and haven't heard anything. Is this typical? Should they hop back into the program to apply again?
Well, any application that we receive, we immediately send a note back to the applicant saying you need to work with a certified lender. They're the ones who are actually underwriting and processing the loans and getting the approved loans from their perspective to us. If you've submitted one to a certified lender, give them a call. I know that of the 22 lenders we are working with in that program, I think the last count was 7,000 inquiries. So they've been inundated with telephone calls and emails. So be patient, but I may later this week give them a call and see where they are with processing your application.
Great. Is there a set number of loans, or is it just the amount of money that's out there, Bob?
It's we're just capped by the amount of money. So $35,000 is the ceiling for the Small Business Emergency Loan Program, and we have $30 million to distribute. So if we did everyone at $35,000, we do probably around 900 loans. Most of our loans we've been seeing are a little bit shy of $35,000. So I expect ultimately we'll probably do around 1,000 loans through that program. And through the Small Business Loan Guarantee Program, it's hard to tell. It depends certainly on the banks and what that are originating, but I suspect we'll probably see 70, 80 large loans out of that program.
A couple questions about the website. Financing available for different industries. Are those industries all listed on the website, Bob?
If you're referring to the Small Business Emergency Loan Program, which is limited to a set number of businesses noted in the executive orders, those are on the website. If you go to the website and click through to the business resources under the COVID banner or COVID slideshow, it will actually have the industries listed in terms of eligibility. So you should be able to find your information there. Of course, we have a lot of other programs for other industries that are growing and have some job creation relationships related to those as well. But in terms of the emergency loan programs, the emergency loan program does have the eligibility listed in terms of the industries, the loan guarantee program. Most industries are eligible for that.
Great. Thank you very much, Bob. Oh, we've got one more that just came in here. As an independent contractor who does not have a business account with any bank and is not registered with Secretary of State, I can't find a bank that's willing to take my application. Is there any Minnesota State loan option for someone in my situation?
Well, that would be challenging for the loan guarantee program because that generally works exclusively with banks. There are some other lenders on there, but if you're just looking for some operating expenses, the Small Business Emergency Loan Program is probably the best option for you. We don't require folks to have the type of documents that you refer to. You just need to have a DBA and evidence that you're operating as a business in terms of financials and other numbers and documents. So go to our website under the Small Business Emergency Loan Program, and you should find a certified nonprofit lender who will be able to work with you.
Great. Thank you very much, Bob. And now we are going to transition to Rick Wall, who is the CEO of Highland Bank. And
thank you, John.
And Paycheck Protection. You bet.
All right, thank you, John. Yeah, Highland Bank is happy to share with you what we know about this program. It is a great program, and if you want to follow along with some of the information that I'll be sharing, you certainly can go to our website, highland.bank, that's HIGHLAND.bank, and you'll find under, right on our front page, landing page on the website, Coronavirus Emergency Loan Program Guide. So it's got this information and information about applying for any of the loan programs. So you can see that as we're going through. This pandemic has really changed the way we're all interacting with each other, and the economy has really been impacted by that. The SBA and the federal government have come out with several different programs to try to stimulate economic growth and to sustain employment during this time where we're social distancing and doing the things we can to try to minimize the impact of the pandemic. Couple of the different programs that have come out from the SBA. The first one is the EIDL program, and as John mentioned, you already had a seminar on that. That program you apply directly to the SBA, so banks like Highland really aren't very involved in that program, but you can get up to $2 million and you apply directly to the SBA for that one. The second thing that is significant in terms of what the SBA has done is through the CARES Act, which was enacted a couple weeks ago, and it's a $349 billion program that has many different facets that impact and try to support small businesses. And I would just editorialize here for a second to say, I think this is really an outstanding attempt from the federal government to try to move resources to small businesses in a very expeditious fashion. It is a job that is very hard, I think, to accomplish. And this program, the programs they put out certainly are not perfect, but they will effectively help a number of small businesses, and done in the time that they were able to get this done. It's kind of amazing. Highland Bank does a lot of small business lending, and typically a SBA program would take 2 or 3 years to get developed and pushed out the door. This one has come out at very short order and with a lot of relief, and as a result, we're still waiting for a lot of information to materialize so we can understand truly how the program will be administered. But the big pieces are out there, and I'm going to share today with you what we know already, and they've already come out in the last 4 or 5 days with a couple of different additional bits of information. So they're coloring in between the lines now, and we're starting to get a better sense of how the programs will really be executed. Under the CARES Act, one of the things that they are doing is they're giving each borrower who currently has an SBA 7A loan some payment relief. So they are going to pay, the SBA will pay the principal and interest of the next 6 payments of any SBA 7A loan that is out there now. And those payments are going to come directly to the banks, and then we will submit them through our normal process. So we're learning specifically how those details will work, but any payments that are due after 3/27/20 are going to be kind of picked up by the SBA. So that's a great benefit for those people who are in that program already. A second thing that they've done is they've increased the SBA Express loan program maximum size. So that program is revolving lines of credit for small businesses, and normally the program's capped at $350 million. They're raising that cap to $1 million, which allows banks to then provide additional working capital to businesses in a program where they normally would have had a limit. They've increased that limit. The increase is temporary, only through the end of 2020, but it will give some additional working capital to those people who have that program or who are entering into that program. The program that most people, that's generated the most interest and has a lot of, that has been a lot of the things that we've been working on at Highland is the PPP program, called the Payment Protection Program. And this program is a great opportunity for, the purpose of the program was to put money into the pockets of small businesses so that they could continue to pay the payroll of their staff and not reduce staff count. And so essentially it allows an employer to provide 8 weeks of payroll so that they can continue to employ their staff during the downturn, or at least for 8 weeks. A couple of things about it: it's 100% guaranteed by the SBA. There's no fees to the people who apply and are accepted into the program. You do have to pay an interest rate of 1% over the loan, and you can keep the loan out for a maximum of 2 years. Furthermore, you don't have to make any payments for 6 months, but during that time, interest will accrue. And there's no collateral for this program and no personal guarantees. So it's about as streamlined a program as I think they could reasonably put together. So eligibility for this program is that you had to be operating as a business on 2/15 of 20, and you have to have employees for whom you are paying payroll and payroll taxes. There are some other eligibility requirements. These are expanded from what the SBA would normally do. SBA stands for Small Business Administration, and they've expanded the definition that they're using for this program to go beyond businesses to include nonprofits, veteran organizations, tribal concerns. They're also offering it to sole proprietors and self-employed individuals. They limit it to a company with 500 or more employees, and there are some nuances to that 500 employee limit. So employers with 500 or more, certainly employees ought to look at it, especially if they have employees employed in different areas of the country at different locations. Sometimes you can, you'll be accepted if you have more than 500 employees. There are other SBA rules, but essentially those are the primary eligibility rules. The loan, a maximum is $10 million, and the amount of the loan is essentially 2 months of a company's payroll costs. And there are a couple of different ways to calculate that, and they're giving us some clarity on that, but you can apply for up to 2 months of your average payroll costs, and then they give you an extra half a month worth of loan amount, which can be used for items other than payroll, and I'll talk about that in a second. If you're a seasonal business, there are some variations in how you account for what your average payroll will be, and that depends upon the type of business. And again, those rules are starting to get filled in. They do cap anyone's capacity, any one individual employee at $100,000 of their salary. So if you have someone who makes more than $100,000, you have to cap that salary amount at $100,000. In terms of calculating payroll, there are some rules for that. I'm not going to go into these in detail right now, but essentially they will allow you to, or what they do is have you look at this same period last year, and they want to compare what your salary was for this period last year to this period this year if you're a seasonal business. If you're not a seasonal business, then they look at having you average the salary over the last calendar year or the most recent 12 months, and then use that as your baseline, that average salary amount. And you have to eliminate any amounts over $100,000. If you go on our website, there's some calculators there that can help you determine how to calculate that amount for your own payroll. The payroll, the plan is designed to primarily fund payroll for employees. They've expanded that definition of payroll to include benefits and other expenses that you spend on your employees during that time. There are also some relief that's eligible for mortgage payments, rent payments, and utilities. So that's why they give you that extra half month worth of loan balance in excess of the 2 months of average payroll costs. So payroll, like I said, includes more than just wages. It includes salaries, commissions, tips, etc. There are also other benefits that are included. What is not included is your FICA cost. That is ineligible. And then for sole proprietors, there's a separate way to calculate that. It's also capped at $100,000 for each employee. If you get an idle loan, there is a payroll component to the idle loan, and if your idle loan includes relief for payroll, then you would include it into your PPP loan application to get a total loan amount, because that idle loan would have been forgiven, and they want to include that in the PPP application as well. Loan forgiveness, so that's the most attractive part of this plan. The government has essentially, or the SBA has said, we're giving you this money so that you can pay your employees, and if you do pay your employees and you can show us that you've done so, then we'll forgive this loan. Early indications is that it's not like other debt forgivenesses where it's taxable, but I haven't seen that. I've seen that from the industry, from NAGLE, which supports all the SBA lending activity. I haven't seen it in the regulations yet, so there may be more additional information, but regardless, the loan can be forgiven if you used it for certain costs, which essentially are payroll costs. And then you can also use up to 25% of it for mortgage, utilities, or rent. There is a nuance too for employers who have reduced their payroll already. If they restore their payroll by June 30th, then they have the opportunity to get those, to get their loan proceeds forgiven. This program isn't really meant to fund a business who has reduced their staff and then not rehired those staff back by June 30th. In that case, the calculation really won't allow you much of very much relief. It's designed to keep employers keeping their normal staff component employed during the period, which is between February 15th and June 30th. So how do you request loan forgiveness? Those details are being filled in right now. We have some idea. We're going to look at the full-time equivalent you have during the period in which you're asking for forgiveness. We're going to look at any other payments that you had, rent, utilities, mortgage payments. Then the banking industry will be looking for documents, and they're trying to sort out exactly what is eligible, or what will meet the requirement for proving that you actually had payroll during that period. Once that's submitted to the bank will then turn around and request forgiveness from the SBA, and once the SBA has provided approval for forgiveness, then the debt will be forgiven. The kinds of things that we'll be looking for most likely are tax returns, canceled checks, payroll records, and again, the details of that are still kind of are still being created right now by the SBA. Couple of other things that you need to show that you that are essentially back-end eligibility requirements. You have to be able to show that your business was impacted by the coronavirus. So these are items needed to certify. And right now that's on the application for the PPP program. It requires you to attest to that. It requires you to attest that you're going to use this to retain and maintain payroll, pay mortgage, lease, or utility payments. You only have one option under this loan program, so you can't get more than one PPP loan, and SBA has a mechanism to ensure that that's the case. So when you do make your application, you should make sure that it is for the amount you want and that you're eligible for, because you won't have a second chance to get a second PPP loan. Once the loan is in place, after the period is expired, then we'll be looking for the information that allows us to provide the documentation to get you relief. If you don't get relief, meaning maybe all or some of your loan is not forgiven, then you have 2 years to repay it. It still stays at the 1%, and at the end of the 2-year period, you'd be required to pay it in full. But the interest rate stays at 1%. Just like any other SBA loan or any other loan you get, essentially you're testifying that your information is true, and if it isn't true, then you've got the force of the government behind any enforcement of those loan documents. So that's the basics of the PPP loan program. I'd tell you just a couple other bits of information that have come out. That number of applications has just been overwhelming. I mean, we are working super hard. We worked all weekend to try to keep abreast of the number of people who have been applying, and the queue still grows. It isn't clear yet when we'll be able to fund, because there's still some information we need from the SBA in order to be able to provide funding and make sure we're following their program guidelines. But the SBA has been coming out at what is in our industry record speed with additional guidance. So my assessment is you're going to be able to see funding in 2 to 3 weeks. But you know, at this point, there isn't sufficient information to really provide funding yet. But applications are being taken, and banks are building all the information they need in order to get the programs up and ready to continue through the process, from request to documentation to funding to review of requests for debt forgiveness, and then finally to forgiveness. So with that, that's my overview. I'd be happy to answer any questions that you have.
I've got a list of them here, Rick. You know, access, and I've read about this too, is limited to folks who don't bank with the right lenders. And banks are focusing their efforts on existing clients, as you would expect. Any suggestions on how to navigate this when you aren't banking in the right place?
Well, you know, each bank makes up its own policy towards this program and any other program. And I think what we've seen is there's just been a shock of people interested in the program, and it's overwhelmed the system. And so as banks get a chance to kind of sort out what they're doing, I think you'll see their attitudes change in terms of who they'll be working with. So I would continue to try to work with your existing bank, and those banks that are very active in SBA, I think, are the most likely to then be interested in taking customers who aren't currently banking with them. I'll just, for instance, in our bank, we were taking applications because of from non-customers. Because of the flood we've had, we have put that on hold for a period to make sure we're focusing on getting all of our current customer applications through. But our attitude is we would continue to look for opportunities to help those small businesses that need it, even if they aren't our customers in the future. So there's $349 billion directed towards the CARES program, and at $10 million or less per loan, and some of the loans come in at $200 or $2,000. It takes a lot of loans to get to that number. So while there was fear, I think initially that that all that money would vanish right away, it doesn't appear to have vanished at quite that rapid pace. So there may still be more time to still get your application accepted by a bank.
Right. For companies that are mandated to be closed, the question is when do they start using this paycheck protection? They've got employees that are on unemployment, some of which are making more money now with the extra $600 a week from the government. So just not sure if this is something, do they have to wait until they're all the way open? And at that point, does this even pertain to them?
Yeah, the good question, and that was one of the things we saw right away, because it seemed like those were the businesses that could benefit most from this plan. As the program was put together, I think it was hard for them to meet every specific instance, but so the way this can apply to those companies that have been forced to close is the SBA has allowed that as long as those employees are rehired by June the 30th, they have an opportunity to get the payroll protection plan benefits. I can't give you specifics yet as to how that calculation will work, and I wish I could, but that is something that they've clarified for us, that if you rehire by June 30th, then you can get the benefits under the payroll protection plan. And sooner is even better because the calculations make more sense.
So just a clarification from a couple of people. You can apply for the SBA, the EIDL loan, and the PPP. You just can't use the funds for the same items, correct? One is for payroll and what you went through, and the other could be used for operations?
Well, yes and no. The EIDL program does allow you to use those proceeds, some of their proceeds, for payroll, my understanding. And so if you are using your EIDL loan proceeds for payroll, then you wouldn't apply. You would have to list on the PPP application that you have a certain amount from the EIDL program that is directed towards payroll. So that would be included in your PPP loan program application.
I have two questions that are different, but both about independent contractors. For an independent contractor, what proof of work will need to be submitted under the PPP?
Well, good thing you asked, because that just about 2 hours ago, they released some information on that. And
Rick, did we lose you?
no, we didn't lose me.
Okay. That
information just came out, so I'm trying to find it. Why don't we, can we hold that question for a minute while I see if I can find that, and I'll take another one in the interim?
We'll do that. Yeah, let's see here. For an independent contractor that's essential, or that is essentially an employee of a company, who should be applying for the loan, the independent contractor or the company?
The rules have been clarified that the employer of the independent contractor does not include independent contractors in their PPP proceeds calculation, because they will not be using those proceeds to pay independent contractors. Independent contractors should apply on their own and not as part of as a part of their employer company. I guess employer isn't the right word, but their contracted company.
With the loan forgiveness, this company is downsized. In restoring payroll to qualify for funds for loan forgiveness, is it required to restore with previously employed persons laid off, or can we restore with new employees as some have taken other positions or are no longer a good fit for new positions? Is the ultimate goal by June 30th to just get back to a net zero headcount change prior to the COVID impact?
Yeah, it is. There's nothing that I have seen that indicates this is individual specific. So it's all about the total payroll count and keeping people employed. It isn't necessarily about keeping the same people employed that have been employed before.
Someone's banking with someone that said because the details are not finalized, they're not able to submit or even allow them to apply yet. Is this what you're experiencing at your bank, or is this just kind of a one-off here?
I can tell you that the banking industry is really challenged with this implementing this program in such a short period of time. I think those institutions whose business model includes regular SBA lending are the ones that most easily were able to embrace the program, because we're used to dealing with the SBA and their rules and regulations. So those are the ones that generally have been most aggressive in moving forward with this program. Each bank, as I said before, has to make their own decision. They're not obligated to offer this loan program, and it does take some time for the banks to figure out exactly how do they interact with the SBA. Again, this came together in such a short time that there wasn't the sorting out that would likely have happened if we had more lead time. So as a bank gets up to speed with what they need to do and how they need to go about it, then they're more likely to be able to do this. But the SBA has made it clear that every bank in the country is eligible to be able to offer these. But it is a logistical, just as a small aside, as a bank owner, it is a real logistical challenge to try to do all this in such a short period of time. And if you have to invent a new system or get a new system set up in order to do it, meaning connecting with the SBA, it's just likely to take more time.
Kind of a couple combined here. Do voluntary benefits such as long-term disability and short-term disability qualify, as well as expenses like workers' compensation?
Let's see. Trying to see, I have a list specifically. Generally, benefits that are not FICA are eligible to be included. Healthcare, insurance premiums that are paid, vacation. I'm looking for my list. I've got a nice list of all of them here. What John asked me, there was a specific question in there of a specific item.
It was long-term disability was one of them. Okay.
So yeah, vacation, parental, family, medical leave, sick leave, group health care benefits, payment of retirement benefits, but only as prorated over over that 8-week period. You can't take your annual amounts and include them all in that.
And I'll let folks know too, we'll get this video and these slides up after this program's over, probably later this afternoon. But Rick had sent all of his details in a easier to read PDF that we are getting up on our site as well. So a lot of this is covered there. Rick, does the 75% of the total money allocated for payroll need to be fully spent by June 30th to qualify for full forgiveness?
Specifics on that calculation are still coming out in terms of how the forgiveness is going to be determined. Just, you know, as I look at it, I would, if I were a business, I would calculate the amount as best I can based on the calculators that are out there we provided, or, you know, as you see the rules, apply for all that that amount, which is the 8 weeks of total compensation capped at 100,000, and then multiply that by an extra. You get basically an extra half a month for the non-salary pieces, to the extent that if that total amount was, let's say, $10,000, and in the end you were only able to show that between your payroll and your mortgage, utilities, rent, those costs, you could only get $9,000 forgiven. You know what? You got to pay the other $1,000 back. You had a 1% loan for 6 months, and you got a 90% forgiveness. I'd say that's a pretty good deal for any loan. So I would tend to be, you know, and the fact is that you then spent that on your employees in terms of keeping them employed. You know, that's a pretty good outcome. So you may have some that isn't forgiven, but if that's the case, it's not that negative.
Someone just asked what specific website will this be on this afternoon. That is the one we shared earlier, link.stthomas.edu, and we'll get that posted again at the end here. Someone says that the new 7A loans are being guaranteed by the SBA for new loans originated by 12/31 of this year. Is that true?
Well, so there's several things going on. The PPP loan program is under it follows the 7A rule, so that is 100% guaranteed by the SBA. And I said earlier too, other loan programs, including the SBA Express, have expanded terms. And if you have an existing 7A loan, that 7A loan will have payments forgiven or payments paid for by the SBA for 6 months. That includes existing 7A loans, and new 7A loans are also eligible for that forgiveness.
We've got a couple questions on the forgiveness. So we know what's forgiven here with this loan. What else is being forgiven out there that you know about? Are there any others?
Well, the EIDL has a component that can be forgiven, which is essentially compensation related. And I'm not the expert on that because that's not administered by banks, so I don't want to go too deep into that. Other than that, I've seen lots of other programs that are being offered, and none of which we administer. So I'm a little reluctant to say this, but it appears that there's a Minnesota Small Business Emergency Loan Program that offers some potential forgiveness from what I've seen. That's the only other one that I can think of that offers forgiveness. And of course, the PPP is the biggest one, right, which can give you 100% forgiveness.
Right. Just a couple more as we're trying to make sure we get out of here on time. If independent contractors are supposed to apply themselves for the PPP, what happens if they're not approved in the program? Is there any other thoughts for an independent contractor that's trying to use this program specifically before they would go to other options for supplemental income?
I don't have a answer for other options right now, other than this program. So.
All right, I think we lost John, everybody. I'm going to take a look and see if there's any other questions that might work out here. Oh, looks like John's back just in time. John, did you see any other questions that might be answered right now? Okay, maybe not. So,
you know, Elizabeth, I would just add one thing. That question that John asked me.
I got booted from my own webinar. Are there any prepayment penalties, Rick? I'm not sure where we left off here.
None on the PPP program. You can repay at any time. John, I just say that as we were talking here, I was looking through my notes, and apparently there is some language about the independent contractor, but it isn't specific about the payroll. So I don't have that detail right now. It really related more to how they interact with an employer that employs an independent contractor. So I don't have that information about what specifically how they would calculate that information of what they would request for a loan and what would be forgiven.
I think I'm back. Am I back?
Yes.
You are.
I got booted from my own webinar. Interesting. The wording from the final guidance says that no more than 25% of loan forgiveness amount can be used towards non-payroll costs. If we were to spend more than 25% on utilities and less than 75% on payroll, will our loan no longer be eligible for forgiveness, or is it just that portion spent? I'm sorry, I believe you did answer that already, didn't you?
Well, I don't know if that was it, but I just say the guidance again isn't clear exactly on how forgiveness calculation will be made, but they have said repeatedly throughout the bits of information that have come out that they're essentially capping the non-payroll at 75% of the payroll. Since we don't have the final calculation, I can't tell you exactly that that's how it's going to work out. But so if you had $100 and you only wound up a $100 loan, and if you only wound up with $60 of payroll, my guess is that you're going to be capped at 25% of that 60, as opposed to, I'm sorry, yeah, 25% of that 60 as opposed to 25% of the $100 on the non-payroll pieces. That's my guess, but I can't tell you for certain yet.
Sure, we got one last question here. If we applied for this loan, can the lender decide when to give us the funds, as if we get open by June and they release it at that time for someone that's not open right now?
Yes, the window for this loan program is from April 1st to June 30th. And so, you know, if you were not open, it would seem most likely to benefit you to not take any proceeds until you were back open again. That way the calculation would give you more forgiveness.
Sure.
So.
Great. Well, Rick, Bob, thank you very much for taking the time today to share this very important information. We had more than 100 people on the call today, which tells me that this is still a very big pain point for an awful lot of companies. So thank you guys both for taking time out of your very busy, hectic times that we're all in to share this information. Thank you to each of you for joining us as well and for your questions. Again, we're recording these sessions and they'll be posted as soon as they're ready to link www.stthomas.edu/business support series. Watch for an email on our next webinar, which is Thursday, April 9th, on family communication on tough times. That will be at 11 a.m. We feel it's an important topic as we head into our Easter weekend and hope you can join us. On behalf of the Schultz School of Entrepreneurship, the Small Business Development Center, and the Family Business Center, we look forward to seeing you all on the other side of this tough time, and we'll be here for you then like we are now. Stay healthy. Thanks.